maybe I was feeling a bit negative when I was preparing these, and maybe I was just a little bit salty. But I have a different perspective on things sometimes where I'm just like, like, we talked about not buying it, and sometimes we show opportunities that we're happy about. Other times we're showing opportunities that we don't necessarily like. And the first thing I'm going to share with you today is going to be McDonald's. And so McDonald's is one of these huge index names, right? You talk about it being a component of the Dow. That's a big deal when you talk about a company being listed on that. Some traders trade it as the US 30, or maybe they trade Dow futures. It's one of those bellwethers of the economy. McDonald's over the past several decades, right, has been ubiquitous with American culture. You talk about like, every child just about, has ate at McDonald's, has had a McDonald's cheeseburger, has had a Happy Meal. And so, and at one point, it's just kind of one of those cultural references, right? Like, it's just like, oh yeah, Happy Meals. It's just a cool name for a kid's meal. Nobody has marketing that was so creative for a company, for a restaurant brand, and its global presence, right? Is I wouldn't say unmatched because technically Subway has more global locations than a McDonald's, but
Wow.
Subways, those things are in like shipping containers and like all kinds of crap, right? So their footprint around the globe is where it is very big. So when I think about them, and I say, okay, well, what are you going to do for me now? Right? We talk about inflationary environments, and we talk about where like, well, let's just get into why I'm feeling bearish on McDonald's and why I don't necessarily like the idea of getting into McDonald's now. Now, if you look at McDonald's on the monthly chart, this is really as ads pop up here, this is really a really good healthy monthly chart, right? We're in the midst of a pullback. We're pulling back into support in and around this 265 level. You see it right here. We did previously wick down to about the 243 level on the monthly, and then we kind of held that, and we're kind of right back at those previous lows. But we just double topped at 300. So McDonald's has already resisted $300 in and around. This was with the end of the year. And what has McDonald's done this year? It's not performed. It's literally just kind of continued to go to the downside. Seasonality would say, well, probably a bounce here. If it bounced here in and around spring of last year, came back down, sold off in the fall, really strong rally into the end of the year, but then now we're right back and we've sold the move off. Now let's look at the daily. And again, I always talk about, for me, I look at the 50 period, I look at the 200, and we'll pan this out a little bit. The daily talk, now you see the detail in what I'm talking about. The sell off from the beginning of the year, another double top on the daily, just shy of 300. We tried to retest that 297 level, failed that, sold off aggressively. Now we're below the 200, continuing to maintain, and below the, now we're below the 200, we're below the 50. And so you look at this and you're like, oh boy, like, where could it go? You know, if it was in and around that $250 level, you start to get a little bit interesting because you look at that monthly chart and you're like, ooh, right. Um, but again, one of the indicators that I use is in terms of a longer term play on something, is what are people saying about McDonald's? And so when I look at this and I'm like, okay, really bullish on the monthly chart, kind of bearish a little bit on the daily chart with the most recent price action. Um, and so as I there we go. So we'll minimize this and we'll get into what's going on in McDonald's. Number one, the franchisees and the company, they are continuing to fight back and forth. And they're continuing to fight back and forth because McDonald's is like, as a company, it knows it needs to attract the low income consumer and hasn't been able to do that here lately. They've seen pressures on their margins, as everybody has in this environment, in terms of the inflationary environment. How do you keep prices steady for the consumer and protect your profit margins, well, that's kind of the golden goose. I don't know that you can't do both. Like math is math, right? So you really have to be able to have pricing power in a product that people demand in order for companies to continue to be healthy in this environment. And so one of the things they introduced here recently was a $5 value meal. And so the $5 value meal is supposed to be something that is supposed to bring the low income consumer back, right? And so what do you get for a $5 value meal? Now, you get a McDouble, some chicken nuggets, a small fry, and a drink is kind of the component of it. Wendy's has been doing that for years. They've got two tiers of that meal, that same exact meal that they've been offering for years. And they got like it used to be $4, it might be $5 now, but it was like a $4 one. And then you can get one that's a little bit larger than for a $6 value, which basically you get a choice of a sandwich, a chicken or a beef sandwich. You get some nuggets, you get fries, and you get a drink. So Wendy's has been doing that. It's obviously on their menu board and has served to attract consumers. Well, franchisees are stating that the $5 menu option in terms of a meal is unsustainable at that price. So there was a group that was representing franchisees. They were stating that the franchisee side of things, their margins are only 10 to 15%, which, understanding the restaurant business on the restaurant side, that kind of makes a lot of sense. When you talk about what McDonald's Corporation is, they do own restaurants. They do own. There are some corporately owned stores and that sort of thing, but really they're in the real estate business and they're in the branding business. And so McDonald's as a corporation does really well because it generally minimizes its risk on the food service side of things. So now you got head office arguing with the field. I don't like that feel, having been in corporations before where I was mad at the head office because they in place policies where the field has to work through those, and the field's the one that's making the challenges. I hated that corporate structure where home office doesn't necessarily have to feel the pinch of what the field is, and they have started to see on their earnings calls. They said, yeah, the low income consumer has proven to be, we're losing them, and realistically, that's kind of the thing. So I pulled up a CNBC article, and yeah, they're stating we can't sustain this. McDonald's Corporation is going to have to step in and help fund this. And so now that's going to eat into their profit margins quite a bit if the corporation caves and says, yes, we're going to do this. There was a bit of a battle when the corporation decided they wanted to do this. It just kind of, again, and they're only doing it for a month. That's the key thing here, people. Wendy's has been doing this for years. They're only doing it for 30 days, and the franchisees are having arguments about it. And so that's what it is to me. Number two, it's lost its way of where it is in the dining market, right? If I can go to Applebee's for the same price as McDonald's, I'm going to Applebee's. I'm not saying that just the experience is, I'm going to go to that kind of restaurant like a Cheddar's or something like that. I'll go have a sit down meal for about the same price as I'm going to get at McDonald's. You go to McDonald's because it's cheap and it's convenient, it's quick, right? But if you pull me into a McDonald's drive-thru and make me wait 10 minutes for something that's the same price as an Applebee's, well, I'll just go to a restaurant, have a full restaurant experience. You might pay a couple dollars premium, but the pricing difference is just not that. It's just not there. And there are other fast casual dining restaurants that are similarly priced, or local mom and pop shops where you're going to get better food for the price that you're paying. And then again, because of the where it's at right now, I look at the combined risk and I'm like, it does pay a dividend. It is a pretty good dividend, but I don't like the risk right now because people have turned on this name, and we've seen time and time again when the public starts to look at a brand and say, we don't like what you're doing, it's had an effect on the price. I understand, like in the States, we had this go broke program going on here where people will get mad at companies. Anheuser-Busch went through it, Target went through it, where they would appear to take a stance on something, and consumers that didn't necessarily agree with the company's stance were very vocal about what the company was doing. Right, wrong, or indifferent, I think that goes without saying. Last but not least, one of my favorite trading indicators that I use is my daughter. Let me explain. My daughter is a 13-year-old teenage girl. When my daughter quits asking to go somewhere, it's not in anymore. And if it's a publicly traded company, I'm either interested in getting out of that position or I'm interested in not participating. So while McDonald's has a healthy monthly chart, a fairly healthy dividend, it's 72% of it is owned by institutions. So it's a widely held institution, like in terms of what they hold. But there's been a lot of insider selling a lot in the past 3 months. I'm talking about people that are on the board within the corporation. It's escalated pretty quickly. And once insiders start selling, and you're telling me that year to date, the profit has not, the stock price has not performed, I am not buying it.